The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, good morning, folks. Happy July 23rd to everyone. We have a big astro date coming due on the 30th of this month. It's a week from today. You figure that out mathematically by adding 7 days to today, for those of you that are interested in calculus. And so anyway, let's get back to some serious things here. The first chart that I've posted into the room is a chart from John Murphy. It's basically showing you the deterioration of the advanced decline line since May 19th, and it's starting to get worse and worse. I noticed this morning that some of the earnings were coming out were just a little worse than expected in some of these things, particularly American Express. And we happen to have a very close family friend who is in the higher echelon of American Express. And her job is, her department, there were 33 people in the department, and they only work with people that charge $1 million a month. I know you might find that hard to believe, but the average charge for these folks is $500,000 a month. Some charge a great deal more than that. They do not have credit limits. I think there's a 20 million cap, but these people, they live in a different world than we do. For instance, one family wanted to take his family, extended family, to take a safari to Africa. It's a good place to have a safari, by the way. Anyway, they coordinate all that kind of stuff. So it's it's fairy tale stuff. And anyway, about a year and a half ago, they had a new Harvard MBA come in, and there were 33 people in the group, and it was one of their most profitable divisions. And he decided to cut costs, and now they're down to 8 people. And the calls that they're getting are about 40% less than they were last year. Now this is the OB1 to OB people. That's not us, guys, but that's just what's happening with American Express. And I imagine, the stock has been going down for a long time, so who knows? I'm still concerned of why we have the airline stocks going down in this wonderful economy that we have, because with oil prices lower, it's basically a perfect storm. Now, yesterday we had an interesting situation because we had the market open, sharply lower. And, I mentioned at that time that there's probably going to be some buying coming in. If you'll notice here on this Apple chart that we have a situation where it stopped exactly at the 786 retracement within 10 cents. And that's not bad on a $120 stock. And then we had a pretty good rally, and we're a little bit higher than yesterday's high now, which sets up a potential that if it doesn't get any higher than that and then goes below 122, then there's real serious problems in the tech section. And believe me, Apple is still in there swinging, folks. It's 14% of the NASDAQ, and that's still got a lot of clout, even though it's down. It's still still a major player among these things. So we want to watch that very, very closely. Now, there's another thing that's happening. I want to go into gold and silver in just a little bit, but first of all, I wanted to talk a little bit about the banking index, because we have broken out to the upside again in the banking index. Even with the market going down, the banking index couldn't go anywhere. And so what I try to do is I try to find out, why this one went up and the others went down. I know Bank of America has caused a part of it, and Morgan Stanley also, Goldman Sachs has not. Sarah, it's raining. Wow, it's raining here in Tucson. Well, that's unusual in the morning. Anyway, we have a situation where this Bank of America banking index is broken out. So what I did was I went and looked at it on a long-term basis, and it's really this is going to be interesting because if you like Fibonacci numbers, we are spot on at 80.81. We closed at around 80.41. We're completing a 61% retracement of the high from 2007. So that's probably what's happening to the banking index, but it's not a trading vehicle, so I'm not too concerned about it. But we'll just see what happens. Oh, we've got a caller in today from New Jersey. Vince, are you there?
A blast from the past.
How are you?
Well, thank God I'm alive but not kicking. I had several strokes, and I can't stay too long because this is a short show now. But I want to apologize for my speech pattern.
You're doing okay so far, buddy.
Yeah, thank you. Anyway, I want you to know that even though I was in rehab, I'm not able to talk to you. I always was, your screener was nice enough to put me on the phone so I could hear you,
Thank you.
So, a very funny story, and I have to run because I know the shows are short. I refused to go to the gym because to the dining room because I was missing your show. So the woman in charge of the gym, she said, all right, Vinny, I'll tell you what. We'll get him on the phone with your screener, and then we'll put it on the PA in the gym. So you got a whole new bunch of fans.
Well, that's nice.
You're a good man. And I want to thank your screener because I could not talk to you. I could only listen from where I was located. I'm going to run now, Tom. I'm sorry, Larry.
No, you're doing fine, Vinny. I was glad you're still with us, buddy, because I still get a few emails from you, but I didn't know if those were automatic or not, so I'm glad you're doing okay.
Well, when I hear from Robin Stewart, from Bible, I usually forward it to you. But I fell. That's another story, and I busted my typing hand. So I can even type too well. All I can do is forward. I'm going to let you go, Larry.
Thank you.
Because it's only an hour show, but I want you to know I'm here. I don't speak as well. And thank you. God bless you. I'll never forget you.
All right. Thank you. Listen, our prayers are with you, buddy. Keep in touch, okay?
I will.
Okay.
And I'm a member of Don Bosco. That's another story. I'll tell you another time when there's more time. God bless you, Tom.
Thanks for calling in, Ben. We appreciate it.
Yeah, thank you. My pleasure.
Okay. Bye. I was wondering where the increase in all the business happened from, and I guess it was from the nursing home in New Jersey. He's a nice fellow, Vince Lardieri. He's been in with the TFNN group ever since I've been here, which is 2007. And he's a really nice fellow. He's got a lovely wife. I think he met her when she was 16, and they've been together forever, and had a little bit of rough time here, but that's the way life is. Some day it's chicken poop, some days it's chicken salad. Just depends on how you mix it. Okay. All right, now we're going to go back to this banking index here. We are at the exact 61% retracement on the long-term weekly, so we want to keep that in mind, folks. This market, I'm surprised that we're not down 700 in the Dow because of the way the underlying statistics of the market happen to be with the advanced decline lines and everything. So we'll have to wait and see how some of these things shake out. So if we go below the 2001 level, 2100 level in the S&P, I think that would probably be, the first sign that something's not right. Well, the first sign is that you got that NASDAQ gap down due to Microsoft and especially Apple and a few others. So we'll see. But there's other stocks that are holding up. We have Qualcomm. Look what's happening to Qualcomm. That's been a big stock for many, many years. I have a really good Qualcomm story. You have to listen to this. I got some important things, but this is not important, but it's interesting. In 1999, one of my very, very good friends, John Maresca, in Southern California, San Diego, had a gardener. And his gardener was the gardener for the CEO of Qualcomm. And the CEO from Qualcomm, every morning when he saw his gardener come out, and he had a very large estate, so he had to be there every day, would tell him to buy as much Qualcomm as you could. So this gardener put every dime that he could in Qualcomm. And after about 5 or 6 years, he had made $1 million. And this guy was born in Rosarito Beach, Mexico, and he was able to retire. And he kept his little business for his landscaping business, but he hired a bunch of people. So he had 5 trucks, and he hired some people to run it, and he's still running it to this day. And he did it all with Qualcomm. So when I saw that today, that sure brought a lot of memories back to me of what happened with Qualcomm. Now I wanted to get here to talk a little bit about the gold market, because we have a lot of things happening with the market breaking down badly, and it looks like it has no chance of ever going up again. The first chart I want to post, though, before I do that, and I probably can't get it done before the break, is the New York Stock Exchange Index. As you can see, we've been down 5 days in a row, and that's pretty big, not much of a correction at all. We're talking about a 2 or 3% correct, not even that, 1.5% correction. So that's really not much happening as of yet, but we'll have to wait and see what transpires. But 2100 is the key level for the S&P 500, and below on the NASDAQ, I believe it's below 4580. We're still about 40 points away from that number to see if the market is getting ready to have a pretty big correction. And really, there's no people. Well, that's really good English, Larry, from your old Hoosier days in Indiana. Is the fact that the VIX index, there is absolutely no fear in the market. I mean, there is none. I mean, that's just there's just none out there, and that's a bad situation from the bull side, because they tend to turn around and bite you on the keister if you're not prepared here. But we've made new lows for the year in the VIX index. And if you'd have told me that back on July 6th, I said, yeah, I could sell off a bit, but I didn't think you could make new lows on the year. So there's, basically complacency in the market. And, we're still very, very close to the highs. It wouldn't take much at all for the market to turn and go up from here. And believe me, it probably could. So we have to, give it some respect, but we need it to get below at least 2100 in the S&P to give some semblance of a possible, ABCD structure to the downside. The fact that the NASDAQ looks so bearish long term, I think, is extremely important. We had 3 ABCD patterns there at that time. And we also had a situation where we had 3 1.618 expansions happening at that time. And I'll post that in, and then we'll take a little break, and we'll be right back after this break.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, we're going to take a look at the gold market here. I posted into Tiger TV the 30-minute chart on gold. It shows over the last 4 days. You see we made a beautiful ABCD down there at the 1085 level. We rallied up about $20 exactly to 2085, which was a 61% retracement of the high after the rally when we had the $35 rally back on Sunday. And so the market has just been making lower highs and lower lows, so it still seems to be pointing to the downside. However, one of the things that I've learned is that once everybody is on one side of the market, you ought to start looking around the corner. So what I'm going to do this morning is take a quick look here at gold over a long-term weekly basis just to see where we are. And as you can see, we are from the, you can't see it yet, but you will soon. Here we go. There you go. You can see we're at the 50% level of the low from 2001, when we were that actually happened in January of 2001, I believe, when we made the low in gold at around $260 an ounce. So I'm just going to show you a couple things that, it has a chance, but believe me, it's a slim chance. The only other, there's a couple things. One, that silver hasn't made a newer lower low than anything else, and then another precious metal, palladium, has been acting relatively nice. I'll show you that one. And also, but I did want to mention, I wanted to go back and show you a little bit of history with the weekly charts. And I'm going to go all the way back to October of 1980. And I'm doing this because someone emailed me and asked me to tell a story about one of my most scary moments in the markets, and that happened in October of 2000. Let's try it again, Larry. In 1980, it was October of 1980. The market had peaked on January the 20th at $862 an ounce. It dropped $400 an ounce in a matter of a very, very short period of time. This looks pretty much like what's happening to China. And then we had a 61% rally up to the 727 level, I believe. That's where it was. And I had sold it on that Friday, and the market had moved down $6 in my favor, and I was short, and I was short a lot. I was trading at Drexel Burnham. I ran Drexel Burnham's accounts. We had over 400 accounts, ranging in size from 50,000 to over a couple of million. And I had a large amount of money, about $20 million that I was trading, and I was heavily involved. I had limit positions at the time in gold at the CME, and so I was short. And it was Sunday morning. I got up usually about 4:45, and I would take a shower and shave, get my clothes on, and I would be in the office in 22 minutes into Beverly Hills. And that morning I got up, I was shaving, and I had a radio in the shower so that I could listen to the news, CBS with Charles Osgood. And Charles Osgood came on the air and he said, "Ladies and gentlemen," he said, "Iranian fighter pilots have hit Iraqi nuclear stations. War has broken out in the Middle East, and the price of gold is soaring." And I was just ready to shave, and I was thinking, do I slit my throat from the left to the right or right to the left? I said, oh my God, don't tell me I got to go through this same BS that I did in 1974. I said, this is going to be oh my God, this is going to be a disaster. And he goes through 2 or 3 commercials. It seems like forever, but after 5 minutes or whatever it was, he starts out, and he didn't even bring that up as the #1 show. And then he said about the planes and everything, that they hit these outskirts of reactors and stuff. And he said the morning London gold fix is up $2.65. And I said, oh my God, I didn't even get dressed that day. I just threw on a pair of sweats, my baseball cap, drove in. And I got there my usual time, maybe a little bit early, and gold. By the time I got there, gold was down $15, and it just kept dropping and dropping, and it went down for quite a while. But by the time my boss came in, one of the director, he came in at about 7:30. He saw me wearing my sweats and a baseball cap. He thought I had quit, because that's what guys usually did. They came in to get their stuff and move out. And he was but I wasn't quitting. But anyway, that was a funny story. But that was my most harried moment in the commodity markets. And I met Charles Osgood on a plane about 15 years later, going to Las Vegas. And I saw him there, and I said, "I've got to tell you a story." And he says, "Hey, I just read that." Shh. He says, I just read it. He said, "I don't have any idea what it is." So it was really funny. Anyway, we'll be back and get back to the market stuff, and we'll do some more work with gold.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're looking for a great opportunity to diversify your financial portfolio, consider the Principal Protected Market Safe CD from Everbank. They've just released the second running of their 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your deposited principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Intrigued yet? The August 17th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're back, and I believe we have a caller from Connecticut. Bob, are you there?
Yes, I am, Larry. Good morning.
Good morning. You have a question on corn and oil?
Yes, I do.
Let's start out with the corn. I've posted up the spot corn chart, so fire away.
I'm looking for a bounce to the long side. That's what some of my work has indicated, but wanted to talk to the expert and see what he thought the next 2 weeks for corn.
Okay, well, he's not here, but I'll be glad to give you my 2 cents worth.
Okay.
Well, I have to be. You want me to tell you the truth, or you want me to lie to you? Okay. What I'm going to do is that you got a couple places to take a look at it. So to win about 7 cents of the 50% retracement, which I don't particularly like that too much, but with the 61% retracement is 18 cents away down at the 383 level. Now, there's one other thing that really interests me about that particular level, and I'll show it to just a little bit below that if you'll give me a second. You remember we've talked about the 20-man line a little bit, and that comes in at around 375. That's 30 cents lower than where we are now. Let me put this up here and let you take a look at it. And what would be nice, Bob, is if we had an ABCD structure down here, but we do not. This has just been coming down now since we hit the 61% retracement up there at 443. It's been down, straight without any bounce at all. So you have some time here. What you'd like to do is to see a bounce of about 15 or 20 cents, and then maybe another pullback down into this level of 385 to 375, and I think that would be the place that would give you the best spot to look at it, because the corn crop's pretty much made. Beans are the ones that are flowering now, so that's how I would handle the corn. But I happen to be short this right now, so it's sort of a biased opinion.
Well, that's good. Yeah, I think maybe couple of days ago, one of your guests was saying there were some either astronomical or seasonal arguments to the long side of corn. Could you refresh my memory on that?
Yes. Well, actually, it was Rich Anderson, and he was saying that usually the high of corn is made sometime in July, and of course we made the high back on July the 6th when we were at the 61% retracement. So you have that going against you a little bit. The main reason for not buying it here that I can see is we're just looking at a retracement pattern. You could buy it at the 50%. We're only 8 cents away from there, or 18 cents away from the 61% retracement, or 30 cents away from the 786. So I would just wait. There's a doubt here, so there's always another trade coming around. So until you have something clear to look at, I would say it's better to just wait and see what happens.
Okay. Crude oil.
Crude oil. Okay. Crude oil has started to break down a little bit here. If you'll give me 1 second, and I will get it up. Where is it? Oh dear, I took crude oil out. Oh, I know what. I took crude oil out because I was looking at so much in the gold market this morning. Here we go. We get it in here, and we'll see that we are breaking down below the 61% retracement, and that's not a good sign. We mentioned that yesterday because that was happening at 49.88, and I think we're heading down towards the 46.50 level in crude. And all commodities are just getting decimated pretty much, and oils happens to be in that. I'm just really surprised that we don't have a Dow Jones Transportation Index that's going up, because they've got a perfect storm there with lower supplies of fuel, but that's not working. So, but oil looks lower to me. It looks like it's got at least another $3 a barrel to the downside.
Yeah, I've heard some different commentators talk about a bottom in crude oil, and of course, I'm on the wrong side of that, so I'll be getting out of that this morning.
Well, just use a stop. You've held up above yesterday's low, which came in at 49.04, so it's a half a cent higher. So if you get below yesterday's low, you certainly would think that you're probably still in this downtrend that started back on July the 10th, and we've had we're down 1, 2, 3, 4. Well, we've had 4, 5 out of the last 6 days have been down, so the bias is to the downside. Just don't get trapped in it all the way to 46.50, Bob. That's the one that hurts, because that destroys your trading soul. The first mistake teaches, the second mistake kills. The first mistake is that you got into a trade. There's nothing wrong with that, but if you don't do the right thing, that's the one that's going to kill you. So make sure you use a stop here, and then you might, the trading gods might be on your side. Who knows?
Well, there's two pieces of good news. One, I use a stop, and two, I'm in the ETF, so I'm not getting murdered in the futures market.
Yeah, that's like watching butter melt in the middle of summer, so it's not a big deal.
Hey, I just wanted to kind of share a little bit of frustration. I'm sure you know what I'm talking about.
Oh, no, get out of here. Go ahead.
I was of the opinion that once the Federal Reserve stopped the quantitative easing and manipulating the bond market, that a lot of the technical indicators that had been askew would start making sense and logic would return to all the different markets, the stocks and the commodities. And the indicators that are traditionally used, you know, there's a half dozen, you could pick any of them, would start making sense. And oh my God, this has been the most frustrating trading, 6 months in the last 20 years of trading that I can remember. It's just everything's off the charts and not making sense, and I want to pull my hair out.
I understand. I would try to pull my hair out, but I have such little of it left. I don't have that option anymore. But part of the problem, well, not part of the problem, I think most of the problem, I don't think it's related to the Federal Reserve. I don't think they're controlling the markets at any time. They're throwing a lot of money into it, of course, but it's the NASDAQ. You've got 10 stocks that I've talked about before. The 10 stocks in the NASDAQ 100 are 48% of that value. So 10 stocks are making that NASDAQ move up. And believe me, these fund managers and the people that, that are using other people's money to trade, that don't have any skin in the game, when they see the NASDAQ up 40, I mean, they don't have any reason to be short the S&P or to short the New York Stock Exchange Index. However, looking at the underlying internals of the market, if you look at the New York Stock Exchange Index and the advanced decline line and the new highs to new lows, that's telling a totally different story, that there's been a lot of selling coming into stocks over the last 4 months, especially since May 19th, May, June, July. Yeah, the last 3 months, we've had some serious selling coming in here, but it's been masked by what's been happening to the NASDAQ. That's my opinion, of course.
Yes. And what's happening in China is terrifying, and I think
well, that's a closed environment over there. I mean, they can do whatever they want at any time. They don't count votes there; they weigh them, and all the weight is in the hands of about 8 people. So they can do pretty much whatever they want. Now in Hong Kong, it's a much freer market. They never closed Hong Kong, so that's trading relatively freely. But there's a lot of fear over there, because some of those people are stuck in those stocks that still haven't traded yet. And once they start to trade, then you're going to see, how quickly they want out, or do they want to buy more. We'll have to wait to see what history says.
Yeah, the Chinese. My niece just had a trip over to China. I said, "Why are you traveling to a hostile communist country?"
Oh, that's a wonderful place to travel to. Oh my gosh, I've had so many wonderful trips. Bob, I got to tell you, they built a glass bridge over one of the state parks in China. It's about a half a mile long with a glass bottom. Even the struts and everything on the bridge, everything is made of glass. And you can see everything, as you walk down. It's one of the biggest attractions now. You have to have an appointment to even cross the bridge, but I'm not going because I have a mild case of vertigo along with my paranoia and schizophrenia, so I cannot take a trip like that. But just looking at it is just, it's really spectacular. So if you get a chance, Google the glass bridge in China, and you'll see this spectacular bridge. It is really, really, really mind-blowing. It's really spectacular.
Oh, I will. All right. Well, have a good one, and thanks as always, and keep doing a great job, Larry.
Thank you for calling in. You live in a beautiful state up there. I like that place.
Yeah, we do the fall very well up here.
I know that's where President Obama got his Social Security card. Even though he never lived there, I still don't figure out how that works, but we'll have to wait and see. Okay, thanks a lot for calling in, Bob. I really appreciate it.
Okay, bye-bye.
Okay. All right, now I want to get back to the gold market, because I have probably been accused of a lot of things in my life, but looking at this one scares the heck out of me. This is I'm going to start out with the gold and silver the Bull Bear Index. Oh, we got a caller from Maryland. Sue, are you there?
Yes, good morning, Larry. Good morning. Thank you so much for taking my call.
My pleasure. What can I do for you?
Yeah, I'm looking for I'm long this for a long time. SLV, the silver, and
Yes.
PASS. You know, I have a long term, and I'm under the water.
Of course, yeah. If you're long term in this, you certainly are. What is your goal in this, though? Just to be long some silver?
Well, I under the water for a long time, so I was thinking that, should I sell it now or just hold on it?
Well, the one thing you don't want to do is to buy more, okay? That's
Yes.
the one thing. If you wanted to buy physical silver, Sue, I would certainly recommend that, like buying 1 ounce silver rounds. That's something that you should do, and then just put those away, because I long term, I don't think you're going to see silver, go below 10. It might for a short period of time, but we'll have to let history tell us. But right now, we're at a real critical level. Now, the spot silver has not taken out the lows from last March as of yet. We've done it in gold and everything else, but right now I would say just stay with your position and just wait to see what happens, because we should be ending this cycle, I think, relatively soon, but this is what remains to be seen if that's the case. But right now, I would just stand pat.
Oh, okay.
If you held it this long, just hold it a little bit longer.
Oh, I really appreciate that so much. Thank you. Because
well, if I'm right, you'll appreciate it. If I'm wrong, you're not going to appreciate it. But I know how that works too.
Doesn't matter.
Not
I
a
really
problem.
appreciate that your advice anyway. That's why I'm calling you.
Well, thank you. I appreciate it.
I appreciate that so much, Larry. And
okay.
Thank you. So I just hold on for a while.
Okay.
I've been holding it for a long time. I got it really high too. So,
well.
Yes. Thank you. Thank you.
All right.
So
thank
much.
you.
Okay. Have a wonderful day. Thanks so much.
You bet.
Okay. Bye.
Okay, now we're going to take a look here at the Bull Bear Index. This is the only reason I'm bringing this up is because we've been coming down here for since August. Well, actually since last March, and even before that, of course, it's been coming down. But this is only the second time in history where we've had such a few bulls that are out there, and that's the main thing. Anytime you get lopsided like we have now, I've got to look at a possibility if this is the case of the market, coming down, and I'm just going to show you how it doesn't even, wow, I can't even go back that far. Hold on, that goes back to 2003, so I can't really show that. But I wanted to show the XAU at the same time, and remember the miners have been getting absolutely massacred. American Barrack looks like it's ready for a meeting with the Chapter 11 folks, but we'll take a look here at this XAU. And the only reason I'm looking at this is there are two reasons. One is the fact that silver has not made new lows yet. It probably will soon, but it hasn't as of yet. And the other reason is this, right, is in the New York, let's just give me a second there, here with the XAU gold silver index. The low that we made 2 days ago was an exact 1.618 to the exact tick at 48, I believe. 48.24 was the exact low, and that was an exact 1.618. 48.02 was the exact 1.618 of the whole range from October through January, and then the low that we have here. And of course, that is a butterfly pattern coming in at the 1.618 level. I posted it as 1.127 because I thought that might be it, but it certainly didn't stop there. But we'll take a look at it right here, and you'll see that it's going to come in. Shucks, just a second. I didn't get to draw it right because my little cursor just didn't catch it right. There we go. Now you'll see that the 1.618 comes in. So you have two 1.618 expansions coming in there at the same time, and a 2-to-1 expansion, much like we had the NASDAQ thing. This looks like an upside-down picture of the NASDAQ. The way to handle this is you've got to get a little rally out of here in gold to let you know that the bottom is in. That's really what you have to do, in my opinion, to see if it's going to be a bottom. I'm not saying it's the bottom. I'm just saying that that it could be a bottom. Okay, Sarah, you can have your bong back. Okay, I'll be right back after these few words, and we'll wrap up the show with some more stock market stuff.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, we've got the Dow down about 40 points, the S&P down a couple, NASDAQ is basically unchanged. The greatest stock in the world, Apple, is up 85 cents. We've taken out the high of the day. of yesterday, which is what we were sort of expecting. So if Apple would go lower on the day, I would say that would be a heck of a place to sell it with a stop above today's high. I posted a chart of palladium. This is from my partner, good buddy, Jim Bartolioni, and it shows what's happened to palladium over the past 15 years or so. As you can see, we've had right now we are setting at the three major equal moves down. They're setting right at the 382, the 61, and the 786%. Palladium is a precious metal, sells for around $600 an ounce. It is rather rare, but it's not a precious metal that people collect, but it is a precious metal. It's used mainly in jewelry and also in catalytic converters and electronic stuff, but it's held up relatively well to the other ones. Platinum, we've already looked at that. That's made new lows, made the big ABCD pattern down there at the 960. We're about $25 higher than that right now, but I don't see there's anything to do here in the gold until we get, and if we do get a pop, if we get gold to pop above 1180 or 1200, then there's a possibility that this low that we've had, about 1200 would certainly be that'd be $120 move. I think we get it above 1130. That would be the first sign that maybe this bottom is significant in the gold market. And the only reason I'm saying that is the fact that the technical pattern has some cycles there, and we have the whole world is bearish gold. I mean, there's nobody that wants to own gold. That's like it was in 2001, folks. You couldn't find anybody to pick up a gold coin if it dropped on the ground. But it's a lot different now, so we'll see what happens to these things. Keep an eye on the even number 2100 in the S&P 500, and also in the Nasdaq. Watch the number 4580, because if we get below that, that would be down more than 100 points in the Nasdaq, and we haven't had that happen in a long time. So that's it, folks. Live every day in an attitude of gratitude and do something nice for somebody who has a lot less than you today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.